Hi guys, it's Ian from Signal Centre. In today's webinar, I'm going to be discussing Cypher patterns, also known as harmonic patterns. One of my favourite subjects and one of the things that I use, technical indicators, patterns if you like, that I use mostly in my analysing and trading. So what we're going to discuss in today's webinar is Cypher patterns, harmonics. We're going to talk about Fibonacci levels, also hidden fibs. We're going to talk about hidden formations, and then we're going to concentrate on four of the most popular harmonic patterns, which is the Gartley, the bat, the crab, and the butterfly. And then also, after we've discussed each of the patterns, we're also going to discuss the target levels. And then we've made just some basic notes at the end just to highlight really what you should be looking for, and confirmation patterns, and also just the fact that some of these patterns, they're not perfect like everything in technical analysis, so they do vary slightly from pattern to pattern, which levels you should be looking at. So let's start with the fibs first. So these are the most common fib extension levels. So we've got the 161.8%. So we've got wave 1, so this is 0 to 1, and then all the extension levels are taken from this start point, if you like. So 161.8% is 161.8% of this move, and then 261.8% is 261.8% of this move. So all taken from this first leg. So leg 1 and then leg 2. If we go to the retracement levels, and again we're just showing the most common ones at the moment, because the symmetrical patterns are normally formed from what we'd call the hidden fibs. So these are the most common retracement levels. So we've got the 50%, sorry, the 38.2%, the 50%, and then the 61.8%. I'm just going to go back to this slide here because I do want to talk a little bit more about the common fib levels. So if you don't know about the fib sequence, then you really should spend time. It's not a great lesson. It'll probably take you about half an hour to get to grips with where the fib levels come from, but the fib sequence is found everywhere, from your hand to the length of your arm. They're in the flowers, shells. So the sequence, or how the way the sequence starts, is 1 + 1 is 2, and then 1 + 2 is 3, 2 + 3 is 5. So the sequence goes up 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. Now, if you divide any of those numbers by the previous number, so in other words 89 divided by 55, then you'll get 1.618. If you divide 55 by 89, you'll get 0.618, and these are the golden ratios, or 61.8% is the golden ratio. So they're seen a lot in trading, very common. These common fib levels are very common in Elliott wave. So when I was talking about wave sequences, then this would be wave 1, where they'll get a pullback in 2, up to 161.8% in wave 3, small pullback in 4, and then up to 261.8% in wave 5. And also in Elliott wave theory, we do sometimes get an extension up to a 461.8%, which we're going to discuss in a minute. That is very common in commodities, and it's also quite common in commodity currencies. And a little tip here: if you do look at like a base currency, i.e. you're looking for a move in the dollar index, you're better off looking at the commodity currencies, Australian dollar, Canadian dollar against the US dollar, than you are other currency pairs, because commodity currencies tend to move first. And I was once informed that that's because the smarter money trades currencies and not, trades commodities and not currencies. Whether or not I believe that, I don't know. So the retracement levels, like we're saying, 38.2, 50%, 61.8%. Now these are the common retracement levels. So again, going back to Elliott wave, the second wave retracement is normally between 50 and 61.8%. The fourth wave retracement is normally to 38.2%. Notice every time I keep on saying normally, because these are, it happens more often than not, but a lot of the time it overextends or underextends. It's very hard to trade correctly, the Elliott wave sequence. And then the ABCD formation, which comes after the whole wave sequence, will normally retrace to 50, 61.8% or 78.6%. Now to get on to the bits that we were talking about. So these are the hidden fib levels. So we've got here 127.2% extension. We've got a 224% extension, 361.8% extension, and then this last one that we talked about, which is the 461.8% extension. All of these fib levels are used to form symmetrical patterns. If we go to retracement, we've got a lot more in here now. We've got 23.6%, again, sometimes used in Elliott wave as a fourth wave correction, but is quite common in symmetrical patterns. And then we've got the other ones, 38.2, 50, 61.8, and then the two others that we're talking about, 78.6%, a very common fib level. I know it's one of my colleagues' favorite fibs, and then 88.6%, which again isn't very common, but the pattern that it's attached to isn't very common either, but when they do work, they work extremely well. So we're talking about Cypher patterns. So we've got four main Cypher patterns. We're going to ignore these ones at the bottom, the A, B, C, D, and the drives patterns, but they do use symmetrical. They are symmetrical and they do use fib extension and retracement levels. So the bearish or bullish Gartley, the butterfly, again bearish or bullish, the crab, and then the bat pattern. Now, one thing that we should note from all of these formations is that they have the same legs. So they all have an XA leg, an AB leg, a BC leg, and a CD leg, and they will all form two triangle formations when completed. There's a slight difference between these two, the ones on the outside. The Gartley and the bat pattern stay within the XA leg, so they're retracement patterns. These ones, the butterfly and the crab, they overextend the XA leg, so they're extension patterns. Okay, let's have a look at some of these on some live charts. So this is one that we've actually found this week, and we've been trying to trade, should we say, and this is the bearish Gartley. Now the bearish Gartley or the Gartley pattern is the most common of the formations. What we're looking for is where the fib levels collide. Okay, we call this a confluence area. So in this pattern here, we can see we've got the XA leg, so the strong move to the downside. And then normally what happens, especially in the Gartley or the bat pattern, is that the move to the upside is pretty choppy, mixed and volatile. What happens here is we've got the 78.6% pullback level here of the XA leg. So what you do there is you put on your retracement tool, and here we're looking for the extension of the AB leg, and the AB leg is up to here, which is 161.8%. So we've got a virtual perfect Gartley. Now, one important thing to note is that if you think that a Gartley pattern is forming, so i.e. we've seen this leg to the downside, we've seen this leg to the upside, and when it's starting to move down, and we've put our extension tool on here, and we've put our retracement tool on here, and we suddenly see this confluence there, and we think, well, I want to buy this leg to the upside. My advice is you're better off waiting for the formation to complete and sell the formation than to actually try and buy the CD leg. And the reason behind that is because this CD leg is, BC leg, so that many legs. This BC leg is very hard to predict. And if we go back to this page here, we can see that the BC leg on the Gartley and on all of these different formations, it highlights different fib levels, as it does with most of the extensions as well. So what you think might be a small drawdown, i.e. 38.2%, which it did on this one, it could extend all the way down to 88.6%, and it could possibly not be a bearish Gartley. And if you've bought it here on the expectation that it's only going to be a small pullback, and then you've got to buy it again here at 88.6%, and then it takes the low and your Gartley formation's broken, then you're in a bit of a sticky situation. So you're better off waiting for the formation, whether Gartley, bat, butterfly, etc., to actually form, and then trade the formation. Don't try and trade the building of the formation, because I've tried it numerous times and it's hard and painful. This is one, sorry, that's, the target level, of course, most important thing. What we're looking for is we're also looking for confirmation. Here was quite nice on this Euro Sterling setup, because we got a bearish outside candle. Now, a bearish outside candle basically makes a new low and then it closes below the previous candle. So it completely engulfs the previous candle, and it is quite a good reversal formation. So we've got a bearish outside candle. We actually got it in 3 different time frames. We've got it in 30-minute, 45 minutes, and also the hourly candle. So what we can do as far as stop placement is concerned is put a stop above the confluence area, above the confirmation candle, and then we're looking for quite decent risk reward. And what I look for in all of these formations, the symmetrical formations, is an extension level of 127.2% of the whole formation. So that is the length of the whole formation, the XA leg. And then we're coming down to here for the target level. So like I said, with decent risk management, the risk reward factor on trading symmetrical patterns can be quite beneficial. If we go to this one, and again, this is a formation that's only just happened. You can hunt for them quite a lot. Sometimes they just appear, sometimes they're quite hard to find. This is the butterfly, a bullish butterfly pattern, and this is off a sterling dollar 1-day chart. So again, we've got the XA leg here. So it's quite weird when you first start plotting symmetrical formations, because if you've ever traded Elliott wave or plotted Elliott wave, then you're just looking at the last formation. So you're looking at this and you're just projecting a fib level off it. You don't look back at previous price action and then project a fib off here. It's normally forward planning, if you like, than actually looking back through past data. But that's how we plot the symmetrical patterns. So here we've got a 127.2% extension of the XA leg, and then here we've got a 261.8% extension of the AB leg. Again, even though it's a fantastic move to the downside, very hard, or even hard to plot the fact that this was going to end up being a bullish butterfly. That move to the upside that we saw in cable was pretty strong, and there's no real clear indication that that was stopping before it actually did. But we have moved to the downside. We've now got bullish outside candles, and we're starting to move higher again. The target level for a bullish butterfly is 127.2% of the whole formation. And this one, because it's an extension level, or it's an extension formation, it's more aggressive. The target level is more aggressive than the inside formations, because the inside formations, remember, we're looking for a 127.2% of that leg. But on a bullish butterfly target, we're actually looking for 127.2% of that leg, as it's the whole formation that we take the projection from. So the target level is up here. If we go to the next chart, and this is a crab, I couldn't find a crab this morning, so this is actually one that I plotted out. It's ended up being short, and we haven't actually got to that level as yet. But like I said, the BC is very hard to predict. So we've got the XA, AB, down in BC, and then up to this confluence area. For the crab, it's a 161.8% extension of this XA leg, so we're always extending the XA leg, and then the larger formation, or the larger fib extension, is here, which is the 224% extension. And again, if we're looking for a target level, once we'd completed that crab, then it's 127.2% of the whole formation. And again, this one is quite beneficial because it's the A to D leg, not the XA leg that we're looking for. We've got one more, and this one's playing out at the moment. This is the bullish bat formation. Now, this isn't a very common formation, and it uses the 88.6% retracement level. So what it is, it's the XA leg, which is impulsive, then choppy, moves to the downside, a 127.2% extension, and an 88.6% pullback level is the bullish bat. And again, we're looking for 127.2% of the whole formation. Now, one thing, or a few notes here, the extension levels and the pullback levels, they do vary quite a lot. This is not just from the formations, but also inside the formations. Just to make myself clear there, I'm going to flick back all the way to this guide. And if you look here, and I don't know if you can see that properly, the XA leg, and it says basically the move to the upside should be 61.8%, but these vary and these vary. So if you notice the AB extension, it can be 127.2%, or it can be 161.8%. But what is important is that one of those fib extension levels lines up with the 78.6% pullback. You see all of these CD legs, they all vary, but they have to line up with this extension level. So here we've got a 161.8% of the AB leg, or a 261.8% of the AB leg. Now, if one of those lines up with these fib levels, then we've got ourselves a butterfly. Again, on the crab, the pullback level can be very mild indeed at 38.2%, or it can be quite deep. It can be to 61.8%. So what's the most important factor of ever trying to trade any of the symmetrical patterns is looking for the confluence area. So we're looking for the confluence area of at the end of the D leg, basically. So we're looking for a confluence area of the AB leg and the XA leg. I'm not saying ignore leg BC, but as long as it stays above the A, then it's normally deemed to be okay, and it can vary quite dramatically. So just to reiterate, we're looking for completions of the D leg, and what we want to see in all the symmetrical patterns is a completion we want to see a completion, we want to see a reversal, and we want to see a confluence area where these fib levels collide. So we explained that bit. The CD leg in the Gartley can be 127, or it can be 161.8%. I've put my decimal point in the wrong place. So what we're looking for is the confluence areas of the XA leg and the AB leg. Don't force a formation to be crude. If you have to force a formation, it's like a fart, it's probably shit. Look for confirmation, look for a topping pattern or a bottoming pattern. So we're looking for any sort of chart formation or a topping formation, i.e. a bullish outside candle, an engulfing candle, maybe an evening doji star. If you look at if you look at D-mark, it might be a 13 count, might be a 9 count. Okay, you've taken the risk, reap the reward. Now, obviously, what I'm saying is you've put your trade on, you know where the target level is. Often they will start to stall as they're moving to the downside off the D leg, or they're moving to the upside. Get your stop in place, put your target in, you know where you're looking for, you know you're looking for 127.2%, and set it and leave it. Okay, I hope you found that informative. We'll be back again pretty soon with some more webinars. Many thanks.